Welcome to the P.O.W.E.R podcast, Property, Ownership, Wealth and Everything Related. I'm Melissa Ashcroft, Director of the AAA Financial Group, where we help clients structure capital and finance across property, business and investment. We also talk to business owners and learn how they got to where they are, and we speak to important people in industries to get a good insight of what they do. So we're not specifically finance related, but today we are. Today I'm joined by James Ross, who is an asset finance specialist. He's worked in the lending industry for over 20 years for businesses like Macquarie Leasing and Dynamoney. Recently, he's been advising other lenders on how to improve their SME offerings and working with Compass Aggregation to help grow their business. Compass is SFG's asset and cashflow finance partner, and he's also a broker. We're going to talk about some really important options for business owners today and how asset finance and business lending can be powerful tools for growth. Yet many business owners and SMEs don't fully understand how to use them effectively. And we'll get to that soon. James, thank you so much for coming to our podcast today.
Thank you for having me.
This has been a long time coming.
It has been. I've been putting it off for a while. Sorry about that.
Yes. So, as I always say, persistence is key.
Yeah.
And I think that's my new middle name.
Yeah,
so,
you've won there for sure.
Well, thank you. So we have a lot of listeners that come from a broad intersection of the world. They might be brokers, they might be business owners, they might be a client of AAA.
Sure. They're
just here to learn and to find out more about our world, my world, and everything in between. So one of the most important questions I often ask is to ask you about your career journey to date.
Yes.
So tell us a little bit about James Ross.
Yeah, well, after 20 years there's a lot to tell, and I don't want to spend too much time talking about that. It might take up too much of the podcast, but certainly...
all the time in the world.
Thanks. Certainly, being in the industry for 20 years, seen a lot. I started back when I was much younger, and...
You're only 30 now, so you were 10
exactly,
when you started.
I started when I was 10. And that was Macquarie Leasing back in the days when, they were still a growing business as well. That was an excellent business to work for. I was there for a bit over 14 years, and that business sort of grew from I think a book size of about $4 billion, and when I left, I don't know, were they about $20 billion? I can't remember if my numbers are accurate there, but they were writing about $600 million worth of new loans every month, so it was a big business, 1,000 staff, and all of that aside, big business, great name. It was a really good place to work. Good people there, good role models, good mentors, and I think that's why I stayed there for so long. But also...
They had a lot of lifers there, right?
They did,
you come across so many people that have been there 15, 20 years.
Yeah,
so.
But also within the industry, you sort of see those people still out there and doing really well because they taught the fundamentals really well. So that was good business. Like I said, I was in the broking team, the dealer team. I worked in Melbourne and Sydney. I was all over the place. So I really enjoyed my time there, but... how did I get into it? That was kind of your question.
Why did you choose asset finance as you went in?
To be honest, I just applied for a job at Macquarie and got it. Yeah.
But
it wasn't like a direction.
You love cars and motorsports.
I do, but that was never part of it. I just wanted a job, and that was a good business, and they gave me one. And like I said, fortunate to really work with some great people who just kept giving me things to be engaged with and new roles and stuff like that.
Because you had quite a few roles into the senior positions that you ended up in. So you climbed your way up.
I did. I started in customer service.
Yes.
And then was sales ops, and I spoke to my boss at the time, who made me do some time in credit before I got into sales. And then I was in sales in the dealer team when that started. Moved down to Melbourne, came back into the broker aggregation team.
Yeah.
That's the simple version.
Yes, yeah.
Yeah, a few things in between, but
of course.
I ended up leaving there because wanted to do some different things within my career. The non-bank lending space at the time was starting to have a bit of a moment. And that was attractive because they didn't have the same constraints from a funding perspective that a traditional bank did back then, and even doing things like capital raises and taking different forms of security was quite foreign coming from the bank. So that was really interesting, and got in on ground level with Dynamoney. And I was there for sort of 4 to 5 years, and again, moved through a bunch of different roles. Sales roles, partnership roles. We started a floor plan business, which they ended up selling off to a business which is now called Soda Capital.
What's a floor plan business, just for people out there that don't know?
Floor plan.
Because I just, back in the day, floor, like it's a ground. Like, what does that mean?
The easiest way to explain it is that it's like a come and go facility, like an overdraft.
Right.
Yeah. So the capital requirements for a dealership are quite cumbersome.
Yes.
You've got to carry a lot of stock. If you drive past a dealership, they may have 100 cars. They need to pay for it somehow.
Right.
And they buy them from the manufacturer. There's a few different ways to do it, but typically they buy them from the manufacturer, or the manufacturer allots sort of cars to them. And they have to finance them. So there's a number of players out there that do it at like a manufacturer level, like new car, and now there's a few players that play in that used car space.
And so a floor plan enables them to buy, say, 80, 150 cars. And so then they do that at a finance rate, and then they on-sell to the market.
So they basically have those cars, they're paying interest on them. They can have them in some instances for up to 365 days, maybe even longer, depending on who the finance company is. And once they sell that vehicle, the intention is that they pay back the finance facility and they go get it.
So I don't want to get us off path, because what I think is so unique about your career is that you've gone from banking to non-bank, which not many people do in a lending capacity. But then you've also worked in an aggregation as well, and now you're being a broker. So knowing all the people that I know in this industry, very few have had this range of experience.
I think, I never think about it that way, but I've been pretty fortunate to sort of find myself in positions where I've been able to do different things, and I think that gives you a pretty unique perspective on how things work. I think that's why I've had a lot of enjoyment focusing on like operational efficiencies in the more recent parts of my career, because after you work across a business, you start to understand the impacts of when you change things in different parts of the business.
Exactly. And the irony is that that's what you're providing debt on.
Yes.
How doing different things impacts, I guess, the overall cash flow of the business.
Sure. So
implementing operational systems, it might involve technology, more people, or what have you.
Yes.
And yet that's what you do every day for your own clients. So I always find that so interesting.
It is,
Working in and on a business.
Yes,
is the
in
same
and
thing.
on, that's
in
correct.
And on.
Yeah, very much so.
So we got to Dynamoney, and then what happened after there?
We Dynamoney floor plan, and after that I left built that business up. I left Dynamoney maybe about 2 years ago. Actually, I think it's pretty close to 2 years to the day, because I wanted to work on some different things. From there, I have been working with a couple of small business lenders in a consulting capacity, helping them to sort of work out best way to do things end to end. Really been enjoying that, and obviously doing a bit of broking on the side. Working with Compass a little bit on how to improve things there too. So keeping myself interested with a few different things.
Saying it all out loud,
Yeah.
Because I can kind of sense that you're like, actually, I have done a lot, and
been doing something.
Unless I'd come on this podcast, I would never have known or seen what other people see.
Exactly.
And that's the in and the out as well.
Yeah.
And
That's
so, you kind of fell into asset finance
I
because
did.
Macquarie employed you. Well, congrats to Macquarie. And then we spoke about in and on. So what type of businesses utilise your knowledge in whatever capacity, whether it's lender, broker, consultant, aggregator? What industries are the most common that you would see in an asset finance capacity?
Yeah, I mean, there's a few different answers to that question. If you look at it from a broking perspective, and I think this is pretty universal, when you are dealing with end customers, you're dealing with small businesses or consumers typically.
Yeah.
I don't write a lot of coded loans, but from an asset finance perspective, there is quite a market out there for it. So you do find those deals coming across your desk every now and then. But I don't play in the mortgage space at all.
Nobody wants to deal with coded loans in asset finance because just for our listeners out there, what that means is it's all tied to your personal wealth position or your personal debt position. So when we do a home loan for you, we're bound by these rules called NCCP, which are called coded loans. So anything, and that's really important for people because their home loan might be their biggest purchase of their life. But when it comes, and consumer cars are a part of that, so like mums and dads, if you own a car, I think what James is, highlighting is non-coded isn't like a dirty word, but it's just ways and means to not have to go through the same compliance and the same legal obligations. And often you can get a better outcome, right? Like you'll probably do more for your business.
I think I think people have started to foresee what will happen in the future with things like the best interest duty and probably preemptively chosen which direction they want to take their business in. So that's why you do see brokers either do commercial only or will do consumer and commercial, coded and commercial.
Sure.
But yeah, the regulatory burden around doing a consumer loan for a $40,000 car, there's a lot of paperwork that the customer has to go through, and I think a lot of times that can be quite confronting from them. They have to essentially provide the same amount of information they would for a $1 million mortgage.
$1 million mortgage, exactly.
So there's brokers out there that specifically specialise in it because they've got the processes down, everything's electronic, and they do it really well.
Yeah. So before kind of delving down into more asset finance from a commercial perspective, what do you think is something that people who are business owners could utilise, I guess, the asset finance world for? Not just trucks and machinery, but potentially cash flow?
Yeah, well, small business finance, the difference between the products is really security, right? So asset finance, you're taking an asset as security. Cash flow, you're typically looking at the business's cash flow as a way of securing yourself. And some lenders take GSAs for smaller amounts, they may not. You got debtor finance that focuses on debtor ledgers. So I think that's really a good way to differentiate the products. That's why they exist.
Yeah.
Equipment finance, or
so like say equipment being machinery for a factory, or
it could be it could be a car,
a gym. We've done a few gyms.
You could do gyms.
Yeah.
Coffee
shops.
You can essentially finance anything. There are some restrictions, and certainly lenders have those restrictions depending on who their funders are. But yeah, I think that's a good way to think about it. You can kind of finance anything, and if you can't finance it through like a traditional equipment finance or asset finance product, sometimes you do find people using cash flow because you don't have those restrictions on asset classes. So you do find that being used as a backup. But equipment finance specifically, why would a business use it? I think it's just a really good way for them to manage their cash flow. If you pay for it with cash out of your business, then sometimes you might affect your ability to sort of weather out those bumps that every business has.
100%.
So you want to encourage. You can't, as a broker, really provide advice, but you want to make sure that they understand or have spoken to their accountant about what is the best way to do it. And the accountant will typically say to use something like equipment finance. There's a lot of benefits to doing that from a tax point of view.
Absolutely.
You claim the interest, depreciation, GST. So it does make sense, and I think that's why it's such a widely used finance product.
Yeah.
Cashflow is something that's definitely been growing over the last 6 years, and that's really as a result of some of the lenders out there identifying that they can provide quicker approvals than what you could get traditionally, and quicker access to money. And there's now lenders that sit on every part of the risk curve with cash flow.
Yes.
So you typically can you can find a solution for most customers as long as they're not really in trouble. So I suppose the equipment finance for pieces of equipment, the cash flow for the cash flow. The interesting thing with cash flow finance, you want to borrow money because you need help with cash flow.
Yeah.
But as a business, you need to demonstrate that you have the
the
cash flow to afford it.
Yeah. So is that like a growth stage? Like I need to bring on more staff, or I need to do a fit out, or is it just really going, you've maybe got 25 grand in your business bank account, but you don't know, like with everything happening in the world, if that's going to cover everything, or what if your top 3 customers then remove having that finance there, even if you don't draw down on it, is like, it's a bit of a backstop as well, right?
Yeah.
And it gives you certainty to proceed with this.
Yeah.
So
you unfortunately, or not unfortunately, you tend to find that people do use cash flow reactively, or cash flow finance reactively a little bit rather than proactively.
Yeah. I think that's an important point.
Yeah, it is, and that's why it's so important, I think, to have good relationships with a broker, but also an accountant that understands what products are available out there.
100%.
Yeah, so they can.
You just mentioned 6.
Well, you identify the issue, and then when you have a good broker, they can find the right solution, because there are so many lenders out there that have different products, different appetite. To find the right one isn't always an easy process.
Yeah.
So you've got to have a good network of people around you that you can ask the questions to, and I think that's really the differentiator of what a good broker is somebody that has that experience within lending, has a good network of lenders and accountants, and can actually provide you with the correct solution that doesn't always just focus on interest rate, which is, I think, the biggest mistake that customers make sometimes.
I agree. And you're using the word broker quite holistically. So I'm really knowledgeable and have really good experience in my lane, but whenever I have the 6 different products you talked about, I don't even know myself. So I go to someone that specialises in that space. So I think that's also an important message. Like, not every mortgage broker is going to understand business. And that's why our whole industry is saying, more brokers should diversify into commercial lending. But that actually includes asset lending as well.
Yeah.
So then there's these things called asset finance aggregators.
Yes.
So that's where you're also consulting to a group called Compass, where basically if you have an asset finance deal, you go through that channel, and then they can help determine which funding platform is best for your client. Is that how it works?
Yeah, I mean, aggregators are a group of brokers, and the benefit of being with an aggregator is that you get access to more lenders and more beneficial products.
Yeah.
Through those relationships. There is, within the asset finance space, there's a number of aggregators, and there's a couple of really large ones. Compass is a great business because they are still on the smaller side, especially when you sort of compare it to some of the other businesses out there. But I think that means that they have that really tighter sort of network relationship with their brokers, which is what you really want when you are trying to educate yourself about
these things.
you know, what the right solutions are, and they are do work closely with SFG, who's your aggregator.
Yes, yeah.
So one of the approaches they take with mortgage brokers is that they'll help them to understand how to write asset finance as an option rather than just
providing an
referring it all.
piece. Yeah.
So
if they want to.
If
a
they
lot
want
of people just want to, because they don't understand it and they're focused on their area of expertise. So it is a good option there.
But certainly when, you know, things slow down, which they look like they potentially will, or get a little bit tougher over the next few months, given everything that's going on in the world, diversification is something that starts to be talked about. So they've got a new GM there, Daniel Tuttleby. He's a really good guy from a lending background, and
yeah, that's good.
if anybody wants to, they should reach out to him.
But just because we have such a vast range of listeners, so it's not a business owner listening to this that will go to Compass Aggregation. They'll go to you.
It's for brokers.
They'll go to you.
Businesses come to me.
We'll put your details in the show notes, because I would say a lot of people that are either know about factoring, invoice, know about all these parameters, now listening to what you've said and being on both sides of the fence, in fact, really a holistic experience in this space, should be approaching people that know the most.
Yes.
And products are going to change, and maybe we're going to see a lot of floor plans for electric cars, given what's happening with fuel prices.
I've read a interesting stat this morning. I can't remember what it was. Maybe it was in the AFR or something like that. That electric car sales have gone up by 30% on something dramatic since everything started. Makes sense.
Yeah.
Given what's happening with fuel, it'll definitely, convince a few more people to purchase those cars. There's already, incentives everywhere.
Yeah, exactly.
About owning those vehicles and then also charging them with solar and things like that. So
so that's I think the core thing. You can't ever crystal ball anything in our world, let alone finance. Like we've seen two rate rises this year. And I certainly know, whether it's a bank or non-bank asset finance product, that their parameters and lending scenarios often are evolving. What I'm interested in, particularly in, is like, where does AI take all of this? Like with James Ross as the broker, how do we get everything in your brain and put it into, a machine? And is that helpful? Because every business has its own thumbprint. Every business is very unique. So can it accommodate in asset finance? Yeah,
I mean, there's a few interesting things with AI. I went to a lunch last week with some accountants, and they were speaking about AI. And one of the most interesting things that I think is happening is that at an organisational level, organisations are starting to think a lot more about privacy and security when it comes to AI. So using external sources is going to be something that you can do less and less. And you would have to use something that's native to within your business that you can control who has access to the information too, which makes sense. So I think that's something that's going to change a lot, and more than likely definitely has started to change. Like when you think of like a corporate level, and that'll filter down into smaller businesses shortly and over time. How will AI change our roles, our industry? That's a good question. I think you mentioned. You kind of hit the nail on the head. AI, you need to put sort of information into to get the information out. You need to provide it with all the data to make decisions, and that's quite a cumbersome thing. I'm by far nowhere close to an expert on the matter.
No, I'm not saying you are, but my personal view is that commercial lending, so when I do commercial property lending or construction, it's so much harder to incorporate AI into it. However, with traditional coded loans, AI can probably facilitate 15 out of the 20 touch points in the next couple of years.
Yeah, it can. I think it really lends itself well to processes that are repetitive because they're, far easier to teach.
Exactly.
Yeah,
and even though a coded loan has all this compliance, that is facilitated by AI now.
Yeah.
So non-coded, while it doesn't have all these extra, document and licensing criteria, it actually is a different scenario altogether.
Yeah, and where it's going to go, I'm really interested to actually see where it goes because the technology, if you think about equipment finance specifically, the technology has existed for a while.
Yeah.
Where you could approve a deal and issue documents very quickly.
Yeah.
Like within minutes.
Yeah.
Right? Everybody has those risk-based models which would, lead into being able to do that. You can generate documents electronically, run AML instantly. There's just so many things, if you want to call them sort of like fintech add-ons, which have come into your industry and my industry, that make everything a lot easier to do. It does come at a cost though, especially if you're using all these different external sources. It does start to add up. But I have no doubt there's going to be somebody that comes along soon and takes advantage of the technology that exists, and that'll blow everything up.
Yeah, I agree. I also think
quickly.
the whole broking industry is evolving as well. And what I find most interesting is that in commercial and in asset, it's often more of a fee for service.
Yep.
And I think that's where the rest of the market's going to end up being, especially as our industries become more professional. And we're making each business or each individual the centre of our dealings rather than the product that we're, being competitive with or whatever is the front and centre. Or this company's better for your needs, instead of going, what you need is this, and how do we advocate for that in your whole client life cycle, basically. So personal loans, credit card debts, all advice on that should be, I think, more central.
Yeah.
But we'll see where it goes.
Yeah, and I mean that's really sort of been the bank's traditional model. That you can provide a lot of different products to solve a lot of your customers' different needs.
Yeah.
If you truly want to compete against the bank model, which is essentially what brokers are doing, you do need to have access to all of those solutions.
100%. Well, in mortgage broking, they do have open banking through Frollo, which is a free service for all brokers. And that's really changed our business, because we used to send, first of all, we're mentioning safety and technology. So first we'd go send a bank statements link, or we'd ask the client to send us their statements. And the issue with bank statements, like .com.au, and don't come out for me, but that you have to enter in your password for internet banking.
Yes.
With open banking, you don't have to do that. It's more secure. It's also you're in control of your information.
Yeah.
And I think as that evolves more, where we can say, download this app and we can have your information as we need it, it's less onerous on the client themselves.
Yeah, I think the reason why open banking isn't as popular or widely used as like a bank scraping tool like bankstatements.com.au is there is a bit of a cost associated with creating those open bank links. So the burden there is obviously, far more significant than buying reports from bank scrapers.
Exactly. It's your data, you're in control of it.
Yeah.
You can add all your bank accounts, all your business accounts, and it actually will show you your net position and, show you different things as well.
Yeah.
And the irony of it all is that that's what the commercial and asset finance industry have been using for years, especially when we talk about cashflow finance. Upload your bank statements, we'll crunch the numbers and tell you. And now potentially there are apps that are doing that for clients. Yeah,
I mean, you get great information from bank statements. When I was working at Macquarie, we wouldn't look at bank statements. That's how much the industry has evolved within such a short period of time. And now almost every lender, especially under a particular amount or within a certain risk parameter, will use bank statements either in isolation and even
Yeah.
even for like the larger transactions, they will still ask for bank statements along with financials because
Yeah.
you can tell everything from, you know, the concentration of a company's debtors to whether they're paying the ATO, whether they're paying their loans on time.
Exactly. You
there's
don't
so
need
much,
to get your ruler out and go
yeah,
through line by line.
and
Technology does that for
and
you.
they usually segment it very well in the report, so it's very
Yeah.
obvious when you're looking at it. You can do the same thing with OpenAI. Open banking.
Mm.
There's a lot of exciting things to sort of look forward to with open banking.
Yeah.
It's just hasn't really been adopted yet, but I think it will be because as a technology, it's also a lot more consistent, sort of like the service. Sometimes you get dropouts and things like that on bank scraping.
True. So given all that's happening with technology and, now in the day, we would just look at, financials, or we wouldn't look at bank statements, or we'd look at these things. And now we're looking at data that is sent to us that's categorized, by, different categories as per the lender's parameters. And so everyone's got this information at hand. They're still going to need these asset finance products.
Yeah.
So putting all that to the side then, what are the biggest mistakes people use when using an asset finance product?
The biggest mistakes. That's a good question. Like, thinking about customers, I think I mentioned it before. People tend to focus on rate, and you become conditioned to that as a way of understanding whether or not you're getting a good deal. And certainly, it is a very good way to understand whether you are getting a good deal. But rate's dictated by where you sit as far as risk is concerned.
Yeah.
And for a business, given what we were talking about before, when it comes to tax time, there are a lot of benefits to financing that sort of outweigh an interest rate that's
Agreed.
marginally different.
Yeah.
So I think sometimes, cash flow and the impact that your repayment has on that cash flow should be something that businesses pay more attention to.
Yeah.
And that is a lot of the time dictated by finding the right solution for the customer.
Yeah. So what I'm hearing is you find them the best product for them. It may come at a higher rate than what they expect, but the tax depreciation or the interest benefits outweigh that.
Yeah, 100%. I mean, that's only sort of like one example, but
yeah.
I think that'd be a good one to sort of keep an eye out for. And the other ones, I mean, unfortunately, when you are dealing with brokers, you go to them because they are the source of truth and do have the knowledge to connect you with the right solutions.
Yeah.
But that's why it's good to find a good broker because being put into the wrong kind of debt can hurt you.
Yes.
And some of the wrong kinds of debt sometimes are much easier to get access to.
Yes. So when you say access to, there's a lot of funds out there. Everyone hears private credit funds. You obviously know all the non-bank lenders in the asset finance space, and that I think is the nail on the head. It's like you may have got something, but actually that's not the right product, but also the lenders out there aren't always focused on that client-centric role.
Yeah.
They're more just, this is how we do things, this is what's going to happen, we have GSAs over this. They can make your life harder than easier, which is the point of debt. We're using debt to make more money. We're not using debt to be in a worse position.
Yes. Yeah.
The irony is that you and I probably see that a lot.
Yes. Yeah. I mean,
I send the hard ones to you. So.
Yeah, certainly there does reach a time, again, why it is good to have good people in your corner as a business. There does reach a time where taking out more debt may not solve your issue, or you might have, one more crack at it, which is when, having a good accountant and a good broker can help you through that, through things like small business restructures.
Yeah.
Just always taking on more debt because you can get access to funds may not be the smartest solution.
Sage words from James Ross.
There you go.
Well, this has been very informative, even for me, even though, AAA's started 38 years ago in asset.
Yeah.
So, it's great
J-Mac.
to chat to someone that has had the full breadth of experience in our industry. I often come across people with one or two, but you've got the whole thing.
Yeah.
The whole package here, ladies and gentlemen.
Yeah.
So what I like to do at the end of every podcast is ask some fire round questions.
Okay.
So you may or may not have read my show notes. That's irrelevant. They're not hard. Just give me what's off the top of your head.
Mm-hmm.
And I think this just, will lean to, everything to summarise of today and also about who you are and how you've achieved what you have done. All right,
Sure.
Are you ready?
Kind of.
Okay, that's yes. Best business lesson you've learned?
Jeez, this is meant to be quick.
You can say pass and I come back.
No, I think you treat people well, you get treated well.
Treat people well, you get treated well. One piece of advice for SME owners or small business owners?
Make sure you've got a good accountant and a good broker.
Most underrated finance tool for business growth?
I kind of think SME finance in general is a great tool, and I don't want to be product specific because depending on what you're trying to do, right, will mean that you need to use a different product. So don't be afraid of debt. Use it to your advantage, and make sure that you got the right people helping you make those decisions.
Great. A habit that makes successful business owners different. You've obviously dealt with a lot of business owners in your career. What's one thing that you've noticed?
Habit that makes them different or successful, I should say. I think, the people that are really successful in business, they operate differently, right? They're early risers.
Okay.
Yeah. I think it's got to do with
ahead of
focus.
the curve, or they wake up at 4:30.
I don't know. I think it has to do with focus, right? Their drive just seems to be different.
Yeah. I was talking to someone about this today. You've got to have a fire in you. Wherever that fire comes from.
Yeah, whatever motivates you, find it.
It's like Dante's Inferno in you.
Yeah.
But you got to just keep having something to push you because it's not all fun.
No, it's not.
And there's a lot of hard parts.
They're the people that impress you the most. People just have this drive. And
that's I can't. Where do I get that? You kind of. It's aspirational as well, right? And what's a power quote or mantra that you live by?
Back to what I said before. Treat people how you want to be treated.
Well, thank you for that.
Thank you.
You've treated me well today by gracing me with your presence on our podcast. So
thanks.
Thank you very much.
Thanks for having me.
Anytime. We'll have to do this again.
Okay.
Okay.
Deal.
Thanks. Thanks everyone for listening.
Thank you.
The end.